In the enduring saga of Bitcoin mining, where centralized pools like Foundry and AntPool command over 50% of global hash rate, Chainalysis 2025, a profound inefficiency lingers, opaque operations and misaligned incentives that create single points of failure, vulnerable to regulatory capture or hacking. Yet as this dominance prevails, a decentralized pioneer rises, TaoHash SN14, the Bittensor Subnet, transforming proof of work into a capture-resistant, community-owned marketplace. The problem tease: traditional mining pools, controlling 95% of Bitcoin hash rate, extract 2 to 5% fees, while operators hoard revenue, leaving miners with diminishing returns amid $10 billion annual energy waste, IEA 2025. This centralization heightens attack risks and stifles innovation in a market projected to $50 billion by 2030, CAGR 15%, Statista. The opportunity amid this centralized stronghold, TaoHash SN14 emerges as a transformative force, trading at $2.25 alpha price with a $9.60 million market cap, 4,720 Tau, and 101.34% APY, Tau stats, Jan 25th, 2026. Yet harnessing 6 EH per second hash rate, 0.7% global, with zero capex. While the 101% APY is the current gold mine, remember that in Bittensor, yield follows value as more miners join. The competition for these rewards will intensify. As V2 catalysts unfold, anticipate yields surging as Tau inflows accelerate at $235.82. The problem with real example. Imagine a Bitcoin miner in a traditional pool like Foundry, 25% hash rate, or AntPool, losing 2 to 5% of rewards to opaque fees, amid $200 million annual revenue controlled by operators exposing the network to single points of failure for regulatory capture or hacking, alongside $10 billion energy inefficiencies, IEA 2025. This centralization perpetuates vulnerabilities in a $30 billion mining market, where decentralized alternatives could save $5 billion annually. The subnet SN14 TaoHash Fix. TaoHash SN14 counters this by creating a decentralized hashrate marketplace. Miners pool with validators, earning alpha tokens alongside BTC, with transparent scoring based on economic value. This community-owned model isn't just cheaper, it's capture-resistant, reducing fees by 50% and decentralizing 0.7% global hash rate, enhancing security and efficiency. What is the subnet and USPs? SN14 TaoHash is Bittensor's premier decentralized POW mining subnet, financializing hash rate as liquid alpha tokens for miners to swap BTC rewards. Its groundbreaking USPs include community-owned pools, 2% fees to alpha holders, rapid scaling to 6 EHS seconds with zero capex, and a roadmap targeting multi-coin expansion in a $50 billion market by 2030, CAGR 15%, Statista, positioning it as the incentive-aligned future of mining. How it works. The mechanism unfolds with efficiency. Miners connect ASICs to validators, submit shares. Validators score based on economic value, BTC price, difficulty. Rewards in alpha, 0.25% value, and 98% BTC. This cycle, pooling to scoring to payout, ensures transparency without central operators.
Jake, and yeah, we're servants of The mission of Bittensor, I like to say the latent holdings mission is the Bittensor mission. There's no difference. And we've been around for a grand total of around 9 months. We got started in November, October last year, incorporated and started building the team.
Technical deep dive. At its core, TaoHash uses economic scoring for shares, difficulty adjusted, with V2 eliminating hash rate waste from validator switching. Supports standard ASICs, peaked at 5e8 seconds, 0.55% global. Tides for verifiable records, smart contracts for fee distribution, reducing costs by 50% versus traditional pools.
Your jobs are quote unquote like under threat, but don't worry, we're gonna figure out how to split you off in a safe way. And really, one of the teams that came to the rescue here that actually funded the developers that maintain the Bittensor SDK, our infrastructure and contribute to the Nucleus team, super important things that are very expensive and very critical for maintaining Bittensor. A lot of that was taken on.
Operating model: miners pool hash rate for alpha BTC. Validators aggregate shares with UMA consensus for equitable distribution. 2% fee to alpha holders via smart contracts, creating a sustainable, meritocratic ecosystem for multi-coin expansion. Pricing and economics: incentive-driven, no upfront fees, miners earn alpha, 0.25% value, plus 98% BTC. Extra costs: electricity around 10 cents per kilowatt hour. Decentralization: community-owned, no operator cut. Flywheel: fees to alpha buybacks. Data sovereignty and verification. Sovereignty: hashrate data decentralized, user-controlled, no central operator. Verification: UMA scoring plus tides records ensure transparency, compliant with standards, preventing manipulation. Team, advisors, partnerships, investors, led by Latent Holdings, with Hansel Mello as key contributor. Partnerships: Bitcoin Core for integration. Ecosystem fit: synergies with all POW chains, amplifying Bittensor's utility. Who benefits and customer profile: miners, alpha plus BTC, $200 million year potential at 1% hash rate. Alpha holders, 2% fees. Bittensor decentralized security. Profile: ASIC owners, crypto miners, hunters in $50 billion market, adept with pools for miners. Catalysts, events, and roadmap. Catalysts: V2 launch, multi-coin expansion. Events: community updates. Roadmap: solo pool, priority fees for $50 billion market. Competition overview: Foundry AntPool, centralized, vulnerable, $10 billion risks. TaoHash, decentralized, 50% lower costs, outplaying with meritocracy, no attack can halt. The entry point: buy Tao, $235.82 on Binance. Stake via taostats.io for SN14. Caution: low liquidity, slippage. Miners connect ASICs on TaoHash.com. Check subnet lock cost or registration fee as they fluctuate on Bittensor. Baseline 5 Tau for yields. The 5 Tau yield. 5 Tau stake, $1,179, 101.34% APY, monthly 0.42 Tau. While the 101% APY is the current gold mine, remember that in Bittensor, yield follows value as more miners join. The competition for these rewards will intensify, compounding to legacy in $50 billion market. The bull case? Now let's talk about the double squeeze. the phenomenon that turns a successful subnet into a Tao price explosion. While a $1,000 Tao might sound ambitious, it's actually the conservative base case when you factor in the math of a supply shock. Here is how it works. As TaoHash scales to a multi-billion-dollar valuation, it creates a massive gravity well for liquidity. To participate in this 101% APY, global miners and institutions are forced to buy Tao on the open market and lock it into the subnet. This is the first squeeze, a total collapse of exchange liquidity. The second squeeze comes from the protocol itself. As TaoHash captures a 5% share of the $50 billion mining market, fees are recycled to buy back and burn Tao or lock it into long-term incentive pools. When 128 beasts like this are competing for the same limited supply of 21 million Tao, we aren't just looking at $1,000. We are witnessing the transition of Tao into a scarce industrial-grade digital commodity. This is the Ethereum level flip, where $10,000 Tao becomes the eventual mathematical destination. Risks, bear case. Low MC from youth, moderate hash rate fluctuation, 20%, but V2 momentum minimizes. Market asleep to decentralized mining. Risks, bear case. The bear case for TaoHash is rooted in its youth. With a market cap of under $10 million, we are dealing with a micro-cap environment where low liquidity means high slippage. Furthermore, hash rate isn't static. We see moderate fluctuations of roughly 20% as miners jump between pools seeking the highest immediate return. While the V2 momentum, specifically the shift toward more stable validator switching, aims to minimize this mercenary hash rate, it remains a technical hurdle, but the biggest risk is also our biggest opportunity. The market is currently asleep. If decentralized mining fails to reach a critical mass of adoption, SN14 remains a niche experiment rather than a global infrastructure layer. We are betting on the shift from centralized giants to sovereign code, but in the early rounds, the giants still hit hard. Thank you for learning with us. This is not financial advice. Please do your own research. Always invest what you can afford to lose. But remember, the biggest risk in this new AI economy is not taking any risk at all. Our intention is to educate you and bring a once-in-a-lifetime opportunity, Bittensor Tao, directly to your screen. The New Age slogan is, don't wait to buy Tao. Buy Tao and wait. Please like, share, and subscribe to Buy, Stake, Chill. We bring you the real alpha.